I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. Equity markets have once again struggled to find direction and conviction in the last week, and that shows up in the performance data. Stocks which had led the equity rally during the last 18 months have been hit harder. For instance, the technology-focused NASDAQ 100 index is down by 4.78% over the last month and only up by 1.78% in the last week, whilst the healthcare sector is down by 6.21% in the last month and barely up at all over the last week. There's not much evidence of insider selling in healthcare stocks in this week's data. However, there is plenty of insider selling within the technology space, and not just from the likes of Mark Zuckerberg, the founder, CEO, and chairman of Facebook, though he has been hitting the sell button aggressively once more. Thus far in October, he has sold 368,504 shares in Facebook at an average price of $335.27 per share, raising $123.55 million. Facebook has had a tough couple of weeks, with a high-profile whistleblower airing accusations of dubious corporate practices and a massive outage taking down Facebook, Instagram, and WhatsApp for several hours. Mark Zuckerberg's stock sales are likely unrelated to these events, and as regular viewers will be aware, he has been a persistent seller of the stock throughout 2021. However, the optics are not good, and Facebook stock is down by 11.68% over the last month, during which time it posted no fewer than 10 new lows. Another notable sale in the technology sector has been made by David Duffield, the chairman emeritus at HR software group Workday. Mr. Duffield is well known in the world of software, having founded PeopleSoft in 1987. The company grew to become the world's second largest application software business before it was acquired by Oracle for $10.7 billion in 2005. Mr. Duffield sold 298,688 shares in Workday at $251.13 per share, raising just over $75 million in the process. This was one of 5 sales that he has made in Workday stock since early June. In total, Mr. Duffield has sold 1.122 million shares at an average price of $249.10 for a total consideration of $279.55 million. Mr. Duffield's timing may not have been the best, however, as Workday's stock price has risen by 9.69% over the last 3 months. Theodore Sarandos, the co-CEO and chief content officer at Netflix, has also been selling stock. Sarandos is a veteran of the video cassette rental market and joined Netflix in 2000, having met CEO Reed Hastings the year before. He is thought to be behind the algorithms that Netflix uses to determine if new programming will be successful or not, something that Sarandos believes can be predicted with 1 hour of a broadcast. He was promoted to the role of co-CEO in 2020. Mr. Sarandos sold 39,707 shares of Netflix at $625 per share, creating sale proceeds of $43.566 million. This was one of 13 sales of Netflix stock that Mr. Sarandos has made since late July. In total, he has sold 286,470 shares with an average price of $471.56 and raised $135 million in doing so. Not every technology company executive was a seller last week. Dustin Moskovitz, the president, CEO, and chair of collaborative software and workflow group Asana, has been buying his company's shares once more. Mr. Moskovitz recently bought 2 tranches of 250,000 shares, spending just under $50 million to do so. Moskovitz had been buying the stock since early June, and in total he has acquired 4.413 million shares at an average of $64.95 per share, which means he has made an overall investment of $286.68 million. Moskovitz has timed those purchases very well indeed, because over the last 3 months, Asana's share price has rallied by an impressive 63.91%. It has also shrugged off the concerns of the wider market and tech sector by rallying by 15.97% in the last month and 5.57% over the last week. In fact, Asana has been the second best performing stock in the prepackaged software sector during the last quarter, and given that it's posted 4 new highs in the last 5 days trading, its run higher may not be over yet. Sometimes it's far better to stand out in the crowd rather than blindly following it, and this looks to be one of those occasions. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.